All right, we are live on YouTube, live on Zoom, live on Facebook, live on LinkedIn, live on X, Twitter. Here we go. Um, Big OpEx today. First order business, hopefully, is to see a little bit more profit from our double ups. I talked about this yesterday in the final hour closing bell segment. Well, let's have a look here at futures down about 0.26%. CFT is trading around 65.90. I'm going to recenter my daily profitability indicator. We'll get a new print for the expected box. If price is opening up a little bit softer this morning, let's see if that gap will push about 0.3% lower. 0.3% lower puts us around 65, 87. Because of the time, I should see some more profit today. I'm hoping another $50, $100. Probably to be safe, I will likely take the profit versus hanging out on this thing all day. As long as it's net profitable. I took so this trade initially had a 313 expiration, and that was a loss for $1.10. Now I have one that was only 70 cents, and it pays up to $25. But I'm looking to see if it'll make me $400 to $500. So it covers risk, covers the call side butterfly that we had that's going to be at 72. All this was built on this trade here, by the way. Right here is where the breakout was measured. I want to see if price will get down to about 65.50, and that's where I put my butterfly trap. So part of me regrets that I didn't take the initial trade with the 50 wide with the 320 expiration, because that would probably be worth, I'd guess, closer to $500, $600 right now, had I not put the 313 expiration. So anyway, that's on me, but we're going to take another stab at it. We're taking another swing at it. Let's get the chat open for everybody. Let's see how everybody's doing in Zoom and on YouTube. All right. We crossed 10,000 subscribers in old YouTube. Been a couple of years. Hopefully no bots, real people, real following, good stuff. Good morning, Jeff. March Madness is officially underway. That'll be fun. Stephanie says Freaky Friday. That's OpEx Friday, triple witching. We'll see. Did we get assigned on Visa? Signed what on Visa? What was the trade? I don't think you got assigned on Visa. Let me double check. What was the trade? I took a trade this week on MasterCard and American Express, but not on Visa. I don't think I have any assignment on Visa. Nope. No trade on Visa. No assignment. So, Gerald, what was the trade? What's happening, Dave? Good morning, Jeff. Mark, what's happening? Let's see here. Thomas, good morning. Greg, good morning. Michael, good morning. How to watch on YouTube? Just go to the channel, youtube.com/Chris Pulver. Morning, Ron. Larry in the house. All right, catching up on some links here. Morning. Hey, Larry. Hey, David. Hey, Elsa. Alan in the house. Nice. What's up, forex business? Hey, Royal. Hey, Chris. Morning, everybody. Okay. Butterflies, what we see today. So the trade that I'm looking for this morning, it was a double up trade that was posted for today's expiration. is right here. We're gonna have a full winner on Micron today. XSP. Did I have a defense trade? Oh, I did get a defense trade filled. When the heck did that thing get filled? 659, 658 for Monday got filled. Okay. Let's see if EGO Weekly defense. I didn't know that got kicked in. So we have March 23rd weekly defense. We have participation and break even. Okay, well, we know how that goes. If we can get price to stay above that defense level, we will still make money despite the market being down. Magnum, what happened to this daily closing bell show? I still do it. I just did it yesterday. I do it pretty often. I just kind of revamped some things behind the scenes with YouTube, and yeah, I mean, I do it. If you're a subscriber, you know when I go live, it's still probably 2-3 times a week. It was in pinch point. Okay. Okay. So we've got defense and engineered options. SPX butterfly. I talked about these yesterday in the final hour session. This double up butterfly spread. By the way, if you're a double up member, go check out I posted this in Telegram yesterday. Go check out your classroom and watch the core strategy video right here. So if you go into your classroom, double up alerts, under the training and master classes, there is about a 25-minute core strategy video. As I did the video, I actually took a trade, and that trade turned out to give us, I closed it for 95% return. If you held on to it a little bit longer than I did, or, got the alert a little bit later, but within maybe 30 to 60 minutes of when I issued the close, it was up about 127%. So hopefully, if you grab that trade with me on XSP, you had a nice little triple-digit winner this week. It was fun to do that in the core strategy video because I really did exactly what I do every single week with double ups, and hopefully you can do that in a nice little 25-minute review. Okay, so check that out as a double up member. We grabbed a whopping $30 yesterday. I was playing it really conservative, really safe. I did end up grabbing some more profit. I didn't officially trade or make additional trade alerts because it was a lot of risk. I went out like 20 wide, grabbed an extra 55 cents, put in a profit trap. I ended up grabbing like $80 on the day yesterday. That's with the 30 cents. I also did like a small 20-cent debit on a broken wing butterfly. It doesn't really matter. I just showed that at the end of the day. But still, like, walked away with a couple winners. If you were in daily profit play, it was a great day. It still stayed within the expected move. Let's see what our expected move is today, by the way. Price is down a little bit. VIX is still around 24.25. We should have like a plus 60 something this morning. I'm getting a 60.81. Is everybody seeing that same number? 60.81, a little bit lower than yesterday. 60.81 for triple witching Friday. Let's change the expected move box right here. So 60.81. And the green lines come later because that's where I'm going to be placing my trades. Change the expected move box to 60.81. And this yellow box is going to be the butterfly spread that I'm looking at. So I let this thing ride from yesterday, which was up around 300%, by the way. I'm letting it ride to this morning because that time coming into today's open, still hanging out in our profit zone, should be worth a few more bucks. Hopefully, I'm right in that. Hopefully, it's going to be worth an extra $50 to $100 this morning, and enough to maybe justify closing out the trade, taking net profit on 3 positions, having 2 small losses, but having 1 nice winner, maybe 350 to 400%. I'll still take that as a, solid win. Okay, 50.57 on Thinkorswim, 60.81 on Tasty Trade. We range on the trade tab. What is that, Stephanie? If we're using the box, do we need to worry about the range on the trade tab? What's the trade tab? I mean, all I'm doing is I'm pulling from my broker platform. Oh, I mean, it's the same thing. That's why I'm making that value my expected box. So visually, I can see in my chart. I mean, it should be reflecting the expected move on my broker platform. It should really be reflecting like that 61 points, right? So 61 points. Now, the reason I built this indicator is also because I want to take into account those gap adjustments. So when the market gaps lower, gaps higher, this will be a gap adjusted calculation. So if we gap down about 0.35%, we open here. I still push the 61 points lower. I take the previous day's close. I push the 61 points higher. So that gives me a little bit more buffer as far as selling puts, selling calls, and trying to see if the market will continue to maintain these efficient days after efficient days after efficient days, which, as we all know in daily profit play, logging 500 plus winners, it does happen a lot. Yesterday, trade 90, I'll update the tracker there for a whopping 30 cents. But yeah, 530 winners out of just under 600 trades were 89.2% winners. It's a lot of trades, it's a lot of trades, but a lot of winners. That's why it works. That's why people like the service. Okay. I get the difference between the two platforms, but not the differences on the same platform. I'm not sure what that means there, Pete. Are you talking about the AM versus weekly? Like AM expiration is going to be right when the market opens, okay? And then the weekly is going to be the end of the day. So, much less volatility expected going into the end of the day. If that's what you're asking. Oh, well, somebody, I don't know who it was, somebody emailed me and said they just did a little AI deep dive onto the Thinkorswim versus Tasty expected moves. Basically, the way they're calculating volatility and the expected move and option volume, blah, blah, blah. Like Tasty, I don't know. I mean, I'm going to go, I'm always saying this, I'm going to take the higher of the two. And the reason why is if I am selling premium for a safer top or safer bottom, I'm always going to take the higher of the two. Why is the calculation different? I don't know. I'm not saying that Thinkorswim hasn't changed their methods, but the reality is Thinkorswim was built by Tom Sosnoff and Scott Sheridan like 13, 14 years ago. And Tasty was built after. So they did add more ways to calculate volatility. That's why they have this Ivy rank that no other broker has. From what I've seen, Ivy rank is very different than the expected move. And that also kind of gives you like Ivy ranking when it's appropriate selling premium. They obviously subscribe to selling premium a lot. That's their main focus. Their bread and butter trade is that 16 Delta naked strangle on the SPY, 30 plus years of history, distribution, outlier moves, the 1, 2, 3 standard deviations. Like it's just a lot of math. So I will trust that math. I'll take the higher of the two. So yeah, that's why I like to take the higher of the two. Somebody's asking, can you explain triple witching? All it means is we have a lot of option expirations today. You have index options, you have futures options, you have stock options, all expiring today. So all major stocks, indexes, futures, all expiring today. That's 1, 2, 3 categories. Therefore, the triple witching. Sometimes we have a quadruple witching, and that would be, I'm not sure if that's a volatility index or the VIX week as well. So you have like the VIX on a Wednesday, and then you have your triple witching on Friday. So that's sometimes called quadruple witching when you have like all four line up in the same week. Link to expected move for Thinkorswim. If you want the expected move box, just send me an email. chrispulverpub@gmail.com. Send me an email. I'll send you the link for it. It's $20 and you get it for TradingView or Thinkorswim. Yep. And that doesn't matter, Pete. I mean, if you've been seeing the triple witching and all the OPEX cycles, options expiration, it's called OPEX, OPEX, $5.5 trillion. Yeah, I get it. That doesn't equate to necessarily volatility. It just means that options are everywhere. It's super popular. It's layer upon layer of derivatives and leverage essentially. But what it does also mean is when we finish when we finish an OPEX cycle like this and it's $5.5 trillion, that's a lot of added exposure next week when the market essentially says, okay, all of this premium expires. And so it's a new round of hedging for a lot of people. Even though the VIX is in the 20s, it's a new round of hedging where puts are going to be added back in. Or there's a softer underbelly because there's less hedging going on because all that volatility stuff expired, right? But I've seen honestly, like I see this almost every month. It's like the biggest OPEX in history, and the day doesn't do anything. It's triple witching, and the volatility. It doesn't matter. It's just a trading day. Now, if it was the end of the month, maybe right end of the month, end of the quarter, okay, maybe a little bit something different there. If it's Jackson Hole, usually that's a pretty wild time because it's thinner markets during summer. If it's end of the year, I mean, those are where I'm like, man, something really silly is happening right now. Who remembers Jackson Hole 2025? I do. We had like a three standard deviation move at. I mean, I remember the plus or minus on the day was like 90 points and ended up going up like 170 points. It was a wild friggin' day. Um, all on Powell, essentially, right? Powell spoke Jackson Hole, and the market was gapping way higher, and we had like this huge, like I don't know if it was 9:45 or 10 a.m., but man, that candle just ripped and didn't stop. So that was one crazy day. Let's see here. Is it a big deal anymore? Not Larry. That's a good point, and not necessarily. With zero DTE, that kind of acts as this big stabilizer. Zero DT is a big stabilizer in the markets because there's so much daily volume. Like 55, 60% of daily volume is SPX zero DTE. So I think that has kind of calmed down the craziness of these major OPEX cycles and triple witching and things like that. But you still treat it like a trading day. It's just a trading day. We'll approach it just like every other day, and we will look to see if we get efficiencies. Okay. All right. Let's see here. Yeah, I talked about those yesterday. Smith, GS, G. We have three pinch expirings. HFJET. Is that? I don't think we're in that position, are we? FJET. I didn't get filled on that trade unless you typed the ticker in wrong. HPQ. I don't have HPG. I have HPQ. We're at 1840. This is probably gonna be a loss. I paid 205. I'm already down 196. Hewlett Packard, even on a great like pinch, didn't freaking move. Even with earnings, didn't move, didn't budge. This thing moved no more than like a dollar, so that sucked. We had the expected move of like 260, and it barely gave us a dollar, so that was pretty weak. So no, there's not really much to do on it. When they expire, if we take losses, we take losses. Is to find risk. We're still winning 85% of our trades. Okay. Dr. Roken asked about the expected move box. Send me an email. Send me an email. Chris Pulver Pub at gmail.com. Send me an email and put it in the subject line. Expected move box. Okay. Send me an email. Expected move box. I'll send you a reply. It's $20. Cool. Okay. Any futures positions you're in? Yes. I've got some futures hedges running. This is for the entire portfolio. Futures hedges. So I hedged a 20% correction with a big fat butterfly. Um, right now, I've got futures up a couple $1,000s, but these are pretty. I mean, this is like getting like $40,000 to risk $500. It's a outlandish hedge that if I need it, it probably helps me with a 5 to 1, maybe 10 to 1 if I take profit early. But I'm just trying to protect myself with something that's relatively cheap. We have some SPX hedges, we have some SPY hedges. Yeah, I mean, I trade a lot of futures options for hedging purposes primarily, and then I will scalp futures when I think that we have a good daily opportunity. I'll also trade a lot of futures options when I think we've got a good solid daily profit play. I tend to take an ES trade in addition to SPX. Cool. All right. What's up, Ian? Okay. So double ups this morning coming up in 5 minutes. Let's see what happens with price should be opening. We're at 2.32% lower. We should be opening just a little bit lower this morning, right around this like 65.90 zone. As soon as we have opening bell price, I'm hoping that we open. If we flush down a little bit lower, that'd actually be great. If we open and rip up, it's still going to be profit. I mean, the options, if I build this trade out, let's go here. Build out a butterfly spread, SPX on the 20th. We're pinned at 65.75, 20 wide. Okay. So this morning at 9:30, this trade should be, so this is showing a debit of around 385. Again, there's not a live feed to this, but I took the trade for 70 cents. It's showing 385. Yesterday it was showing about $250, $260. So if I grab this profit this morning, let's say I can get $350 to $400. Okay. I lost 110 last week. I'm losing 120 on the upside. I'm still up $170 on 3 trades. If that's what it's offering this morning, I will still take it. Yeah, that's really the plan. So I don't necessarily want to sit on this thing all day because if it starts to go up, okay, if it starts to go up where we, let's say we gap down to about 65.90 and then go back up above 6,600 and stay there, this butterfly looks worse later in the day if it's not inside my profit trap. So I need price to either one, hang out here for the day in that profit trap because as I always say with these butterfly spreads, they get a lot better later in the day. Okay. But I have a 50-point range. We have a plus minus 61 on the day. So I obviously like it could be right in the sweet spot as we go late in the day. But that's always the lower probability win is trying to hold this thing all the way into the close and get it spot on. We took this trade over a week ago, I think, or I took it this week. So it's days old, and it's very tough to know what price is going to be by the end of the week, especially the exact pin price. So what I love about butterflies is, can you see how the left side and right side of my profit trap are longer to the right and longer to the left? That gives me more forgiveness. It gives me more margin for error until we get into the close. And then it becomes all about you get narrower on the butterfly wings. It goes exactly to your profit trap levels. And that's where the big fat center pays all those crazy profits. So if we're opening up around 60, 65.90, it should be showing us some profit this morning. And it should be something closer to like, I would imagine we're going to see like $300, maybe $350 of profit today on a 70-cent trade, which is not bad. So like I said, for me, I just want to look and see, do I make money? Did I make money on those 3 trades? If it's net positive, I'm probably taking the profit. Let's see here. Gave me directions for desktop. Uh, Tony, I'm not sure what that you're saying for what the expected move box. That is the desktop application in Thinkorswim. Yeah, I don't have a mobile. I never use like Thinkorswim mobile for trading. I never use the charting part. If you're using Thinkorswim for charting and looking at charts, you're probably using the desktop, right? I've never used the web version for. I use web version for trading, but I never use the web version for for charting. So you have the indicator, right? Pretty sure you do. All right. I bought, yeah. So you have it. And you have if you gave me a Thinkers or a TradingView user ID, you have the access to it. If I responded to an email, you should have both. Okay. No, David, just it's $20, dude. Do I have an options on futures program? Well, so we run into a bit more compliance stuff with futures. So I can have education on futures, but not necessarily trade alerts. So that's kind of how that works. But if you're familiar with options, you can trade futures options. That's the beautiful thing is learn how to trade an option. You can do all of it. All right, let's take a look at that double up really quickly as we get our open. Now it's up $500. Let's try to take some profit. What? Okay, there we go. Let's try to get out of here for $4. $5 even. Come on, give me a $5 close, would you? All right, so it's a little bit wider. We're opening around 87. That's good. We're selling off a little bit. Just need the price to settle down. 5. So it was trading for like $3 yesterday. I'm going to go for like a 450 credit. 440. I mean, the prices are all over the place, but I should just let price settle down a little bit, and this will probably be over $4. I'm going to try to get 425. All right, I'll go by like 5 or 10 cents here. Okay, I want to get some expected moves going. Should put in a closing order for futures or for the SPX butterfly. We're 83. You know what? Let's just hang on to this for a second. I feel like the fills are pretty garbage. So let's get into, yeah, if this says a little bit lower, that's actually good. All right, expect the move box will be printing here in 1 minute. I have highs around 66, 67, gap adjusted. Lows around 65.27. Okay, 65.27. I might look at that 6,600 butterfly spread again, try to get some traps in there. Selling premium around 66.70. Let's have a look. So I will throw in, let me try to get a credit issue. Let me go 70. Let's try to get 470 here, get $400 for that trade. So on double ups, I'm putting in a 470 credit. I'm going to see if that will fill in a little bit this morning. I'm going to keep an eye on this, obviously. Now let's get into daily profit play. So if I'm selling calls, I'd like it to be above 6670. $6,670 is a 7 delta. So if I go 10 wide, that's only giving me 85 cents. Good Lord, that's terrible. If I do put side, if I want to get some premium today, I can do this. Let me look at a expected move base 10 wide. So that is 70, 66, 70, and 80. That's a 7 delta. Let's match that here. 64.85. Okay. Gosh, 10 wide's not even $1. That's crazy, man. All right, let me say and get for 15 wide. $1.20. Okay, price is falling just a little bit. This is good for double ups. Keep an eye on that credit. I'm seeing 4 and change right now, which is about $1 more than what we had yesterday for the close. 15 wide, $1. Let me go $1.25. So I'm doing a 15 wide iron condor right now. Let's see if I can get filled. $1.20. Come on. All right, filled for a buck 20. It's 1380 of risk. I'm going 6670, 6685. This is coming in Telegram for Daily Profit members. So 6670, 6685. I'll just tell you the sell strikes. It's 15 wide. 6670 sell call. 6485 sell put 15 wide. So new trade. If we get more direction, it offers more credit. Take higher credit. But I'm going to start with that 15 wide this morning. And that is a 6685. I'm definitely going to play some defense on that. 6485. 6470. $1.20 credit. So 1380 risk. Okay, I'll look to add some defense to it as well. There is not a dedicated Telegram. I'll post it in my public Telegram if I take the profit. So we're working through this trade. We're trading at, we're right at the pin price right now. This is what I wanted. This is pretty perfect, actually, but see if maybe, let me try to get like a 450 close. I'll kind of work it down here a little bit. We're up. It's up about 480%, 500%. I'm just trying to get this thing as close to $400 as possible. We're just getting a lot of wild prices. So 450 is not filling. Let's try 440. It might fill it like just over $4 right now. 440. $430. All right, I got filled for $430 on that trade for double ups. So I'm out 70 cents out at $430. Double up. Current butterfly put spread. It was the 6,600 by 6575 by 6550. Entry was 70 cents debit. Closed 430 credit. Okay, that's enough to get us net profit on 3 trades. So 430 minus 70 puts me up $360. I took a loss for 110. I'm taking a loss for 120. I'm still up $130 on the trade. I don't have to hang on to it all day. I'd love to. I'd love to see if this thing can hang out in my profit trap and give me a big fat $2,500 winner. But if price is going to slip through this side or this side, this becomes worth 0. So I'm just going to take the winner. Okay. Arthur says just got $5. That's awesome. That's a great fill, man. Would I freaking love $5? Heck yeah, I'd love $5. I was trying for 450, couldn't get filled to 450. So, I'm happy with 430. We took a net profit. All is well. Let's go newsbreakers and SPX, that $4.30. That's a nice winner. So that is up $360. 514% winner. Not too shabby. And that covers the risk on the other side of the trade. Because I had a 72, like a 7,200, 7,220 zone as well. That's going to be a loser today. But great fill on the Arthur. $5 is a fantastic fill. If that was $5, that would be an even bigger win. We had 514%, which I'm never complaining about. But if you had a 430 winner, that's a 614%. Go Arthur. Go Arthur. Nice job. Okay. So I'm out. I posted it in Telegram. Let me throw it in the official alert so everyone can see it. Double up alerts, trade management. The 60, this is trade number 145. entry, 70 cents debit, closed, 430 credit. Hung on to the trade into today's open for more profit. Worked out well. Nice net gain on double ups. I lost 2 trades, by the way. Win 1, but the winner was over 500%. Boom. Underwater, yes, but we have defense and we have until Monday. So I'm not that worried about it if the market is going to. Arthur, no wonder. No, Arthur says, I think I modified your strikes. Okay. I mean, bottom line is if you made money, I'm happy for you. So hopefully that was the case. All right, so I get rid of this. Now I can put my lines in on my daily profit play. So 66.70 is up here. So 70 is the expected move up here and down to 64.85, which is a little bit lower. So I need price to stay inside this range. I do want to look to play a little bit of defense if I can. Let's see if we can get some defense around. I kind of like this like 6,500 level for a profit trap. If the market's going to gravitate towards a round number today, maybe the 6,500 zone. So we have the 85 by 70, 15 wide. I'm going to see if I can get a little profit trap, maybe around the 05 to 90. That's a $1,500 profit trap. And then I will go, let's go 25 and see what that looks like for a credit. So I can get that for a very small debit right now. That would be, I think that's an adequate defense position. If I just take a trade for like 5 cents or 10 cents, it does come off the top of my credit, but that's a $1,500 profit trap with about a 93 to 94% chance of profit. And we'd have to have price drop well below the expected move. Let's see if I can get this thing filled for like a 5 cent debit or 5 cent credit. We'll try that first. 5 cent credit, survey says, probably not. 5 cent credit, no. 5 cent debit, that's cheap if I take it. 5 cents not filling. All right, I'm going to put defense in for 10 cents. Hopefully it fills 10 cent debit. All right, I've got a defense trade in for 10 cents debit. That way, to my put side, I have some protection. And then on the call side, I'll do the same thing. I want to get some protection around maybe 75-ish. So 55, or we'll go 60 to 75. And that puts my break even around 66.90. Let's see, we can go up here for a cheap debit as well. So that's a $15 profit trap. See if I can get in here for 5 cents debit, 10 cents debit as well. I will like maybe take another defense trade with credit if I see it. HEI debit. We just got filled on a pinch point trade, I believe. Try $5 debit here. Okay, so I'm going to play with a little bit of defense. Come on. Let me just finagle this a little bit. So 65 by 80. That's 15 by 20 or 25. See if this will fill for 10 cents. Nope. All right. I'm just going to leave the defense trade in for 10 cents and see if it will fill. Tasty trade window is showing increments of 10 instead of 5. For today, check your expiration. Make sure it's the March 20th weekly expiration, not the AM. but it should be showing $5 strikes, especially for a 0 DT. It should be all $5 strikes. Manish, I'll just share the Telegram link for you. It's just my name, Chris Pulver. Here's Telegram. There you go. Okay. So looking for a 10-cent debit on the so I put a 10-cent debit in on the defense put side. I'm looking at the same debit on the call side. That would bring my $1.20. That brings my $1.20 down to basically $1 of profit. So if I make $1 and then I still have profit traps running on the upside downside this morning, and then I can obviously, kind of assess and see, do I need more defense? Okay, let's take a look at some gamma this morning. Negative gamma below 66.15. Big strikes between 6,600 and 6,540. Is price going to go anywhere today? I don't know. If it doesn't, we'll make money. Mike, I'll take a look. If you sent me that after hours yesterday, I'll take a look this morning. I'm sure I have some emails to get to. I'm seeing now 1, 2, 3, 4, 5, 6 emails that came in. So yeah, I'll address those today. Yep. All right, give me a second. So defense trades. Let me see. If I went 20 wide here, I'm just curious, like, what other defense I can post. That's going to cost. It's like I'm not trying to take a 40, 50, 60 cent defense trade. I'm trying to, because the 15 wide surprise. I went so far like down in the deltas. Like the 15 wide paid $1.20. Usually on a 15 wide, I'd like $1.50 to $2 credit. Just wasn't really offered up today, which is okay, I guess. Defense wise, now this should fill for 10 cents. 10 cents debit, I can part ways with, and if it obviously starts showing credit, I might just reflect the trade and do it again. I like the levels. If it offers up any credit with a move to the upside or downside, I'll try to take another defense trade for credit, but I'll post them in for defense. So defense trades, the bottom defense filled for 10 cents debit. That is coming in chat in about 30 seconds. And it's a 0 DTE, so it's a 320 expiration. Okay. So a couple of defense trades posted in Telegram for daily profit play. So Eloise, yes, posted. Donna, thank you for that. We got some new members in here. Carlene is watching. Who's new? Give me some shout outs in the chat. Who's watching you on YouTube? Who's watching in Zoom? Who's new? Let's see here. Vladi says got 64.90, 6,500, 66.50, 60 for $1.25. Okay, so you're 10 wide for $1.25. I mean, it's better than me. You're taking on less risk than I am. I got $1.20 on a 15 wide, but I went a little bit higher, right? A little bit higher on the call side and a little bit lower on the put side. So I guess that's why I only got $1.20. Okay, Ron is new. Manish is new, I think. I'm new. I'm going to finish your sentence for you. Gotcha. William says new. On Zoom at home in Hilton Head. How's the weather in Hilton Head? I might be heading to North Carolina next week. Be lovely to see some golfing weather. Rose is new, Pete's new, Mercy's new. Nice. Nice to see some new peeps. New people on TradingView as well. Debbie is new. Ian is new. Josiah is new. Nice. How you guys finding me? Love it. Like and subscribe. Jim says new-ish. New-ish. David is new. Yeah. Big welcome to everyone new. You're in the right place. We do this stuff every single day. If I had to guess, price pins at 6,600. Well, if it pins at 66, my double up's worth almost zero. So I would rather take the profit like I did today. And see, I mean, if this is offering more, like right now I'm showing mid price around 4. I mean, maybe you can get 450. I'm showing like mid at $5. Like I'd love to take that fill at $5, but I wasn't going to sit and babysit this thing all morning either. You can see how quickly that mid price is moving. 445, 360, 5 and change. So I'm happy with the trade. I'm glad it's done. Closed out for a nice 500% winner. That's good. Let's see. Great weekend for golf on the Carolina coast. Sounds good. Sounds good. I didn't get a chance to play. We were in California last weekend. We went to San Luis Obispo, and there was a place called Hunter's Ridge that was right there in San Luis Obispo. I was gonna try to play, at least hit some balls, soak it up. But it was just so fun just hanging out on the beach and the pool and just chilling for a couple of days. But yeah, I'm hopefully going to see some family next week. They live in the Raleigh-Durham area in North Carolina. But yeah, there it is. All right, defense just got filled for 10 cents. So I'm on call side defense and put side defense for 10 cents. All right, so we got $15 profit traps near the end of the day. Updated in Telegram, so those are both filled. Now, let's see if I can. Now I'm going to try to pull some credit on another defense to the downside, if I can. So we have the 5 by 90. That's 15 wide. I'm going to try maybe this 10. That's a 20 wide defense. Maybe that'd be interesting. Or maybe go down here 65 by 64, 80. Play a little more defense. That's 20 wide. Okay. I'm going to try this one. That's another 15 wide. Let me see what that percentage sell-off would be, by the way. So that would be a threat level around 64. I mean, it's like a break even at like 64, 65. That's a pretty nasty day if we have it. 64, 65. I'm just looking at a percentage move. A lot of this stuff, I mean, we don't see a lot of 2 to 3% moves a day. So that we have to have a 2+ sell-off on the day. Could it happen? Sure. Is it probable? Not really. Okay. And I mean, unless the VIX is going to move, way higher. Like look at the VIX math. If we do a 25-27 VIX, that's a 1.57% move. I mean, I'm pretty much contained within a 2%, 2.25% move. So if I can get some credit out of this, see if I can pull in like 50 cents credit on this trade. That is another 15 wide. Maybe going 20 wide, 30 wide. That's gonna be tough. I love these profit traps. I just don't think it's gonna be super realistic to expect credit out of this trade. But hey, you never know. I'm gonna try. I'm gonna try for like a 50 cents credit. Okay. So we're way down here for the expected move. If price stays within my expected move box, above and below here, I need price to stay below this green line, above this green line for a nice win on the day. That would be fine. And we'll keep an eye on this through today's trading. Nice, Steve. Awesome close, man. Got out for 480 on double ups. Hell yeah. 480 out of a 70-cent debit. That is a 410 net winner. Crushing it, dude. 585% winner on that trade. Feels pretty good. Love it. I'm not seeing the 6685. It should be on there. Check your expiration. Do not use the AM expiration, everybody. Make sure you're using the weekly. Okay. March 20th AM. Don't use it. March 20th weekly. That's the one we want. That's the one I'm using. That's what has all the $5 strikes. I have one of your trades, the 6,500 put, butterfly 50 wide. Did you exit yet? Yeah, we exited that one for that. That expired, Jason. That expired last week on the 13th. So if you took that trade to the 20th, how's it looking? I mean, it should be offering some profit. Rob, you live in Raleigh? Nice, dude. Yeah, we're looking at airports. I can do a direct good profit. Yeah, well, manage profit. That's my favorite part about double ups is it's not about, I mean, risk is always under control because it's always really contained risk, but it's about managing profit. And that's a great profit, man. So if you took that trade with me, that was like $1.10, $1.20. It's trading $6. Great trade. Protect it. Take profit. Okay. Thanks, Moses. Appreciate that. I think I gave a shout out to all my new peeps out there. That's good. Dave, 500% on double. That is correct, sir. 500%. That is not exaggeration. I closed out for a 514% return on risk in double ups. Yes. We do that on the regular, actually. So, 95% winner the other day, 514% winner today, 186% winner, 230% winner, 75%, 87%, 150, 190, 520, 159, 221, 80, 150, 132, 150, 136, 220. Yeah. High reward, low risk. Yeah. Yeah, so I was looking at either Charlotte or Raleigh direct, and then I'll just drive. My family lives in Winston-Salem, so it's a little bit of a hike to go there. Thanks, Cindy. I appreciate that. So, Jason, how you doing on that 6,550 wide? We did 65. Was 6,500 the pin price? It was 6,550 by 6,450, or was it 66 by 6,550 by 65? Tell me. I guess I can look at my tracker and find out, right? Yeah, it was 6,550 to 6,500 to 6,450. Okay. But if it's showing profit, man, that's a great trade. Sure, Cindy, send it. Chris Pulver Pub at gmail.com. Shoot it my way. Okay. So I'll watch for some additional defense. I'm going to play defense both sides, and I'll put another credit trade out on the call side. So up here, let's try to pin this 80 so I can go 65 to 80 to 67.10. That puts my break even at 6,700. 5-cent credit, I'll take 5-cent credit. If this broker's going to offer me 5-cent credit, I'll take it. It's not filling a 5 cents credit, so I'll just throw it in there at, oh, come on. I'm asking for it to give me a credit. Let me try to get, I think we just had a engineered options butterfly spread fill for 250. I'll double check that. All right, 5 cents credit, not filling. That is a 15 wide. I'm just going to let that hang out for 5 cents. I'll put it in here. I'll put in at 50 cents credit. I'm actually okay with like 20 to 25 cents if I can get that too. All right, I'll keep an eye on these trades. All right, price is moving a little bit lower. Let's see what happens around this expected move. Yes. EOD, what's EOD? You mean engineered options? What's EOD? I know I had some defense get filled. So we had weekly and weekly and weekly get filled for engineered options. I had a SPX trade for my monthly. Give me 1 second. I'm looking for the March 29th. Or March 31st. The heck? I swear that just said filled. There. So this March 31st, 66.65, 66.55, 66.40. This is a 250 to make 250 with a $1,000 profit trap that got filled. Engineered options. Yep. So it should be in here. 66.65 by 55 by 40. You risk 4 to make. I'm sorry. There's risk 250 to make 250. We just need to see the market give a Funyun about trying to fight back by the end of the month. So this is label EGO monthly. Okay. And then I have some butterfly defense today. 10-cent debit, 65.05. Here's my 6,700. So that's a buy the 66.60. Buy the 66.60. Sell the 75. Actually, let me start with my 120 here. So sold the 70. Bought the 85. Sold the 85, 64.85. And the 70. So this way I'll group it as DPP. Now I find my defense. The top side defense is calls 66.60 by 75 by 6,700. So that's top defense. This is bottom defense. All right. Now, that's my daily prop play for $1.20. Top defense, bottom defense. This kicks in near the end of the day because of that profit trap. Fly trade 3-3. Well, I just got filled on one, David. I just got filled for, I just put it in here for this one. 66.65, 66.55, 66.40. The 60, I mean, no, I'm honestly like, I'm just going to be firm in that level. It's trading for 220. Like, that's okay, but that's a 280 to make 220 plus $1,000. Like, it's okay. Yeah, I mean, it's a working order. So I've got one of them trading for about $1.75, $1.80. This one's close. I'm showing like a 220. I mean, look at my prices. They're all over the place. 160, 180, 185. This is the one you're talking about. It's close, but I'm not seeing it's not filled at 250 yet. I mean, if it fills at 250, great. Because it's a 1-to-1. It's a 1-to-1 plus we have a profit trap. So all I need March to do is just bounce off the low a little bit, man. I mean, we're trading at 65.60. If we bounce off the lows, we got $1,000 profit trap sitting in there. It could be fun to make, or we can just make $250 too. So I'm not going to adjust it. I'm not going to take on more risk. I'm trying to stick with the 1-to-1. We were really firm about that with that bonus class. Okay. All right, good stuff. Okay, I think we're pretty well organized for the morning. So the trades I'll be watching, I have my standard daily profit play. I went 15 wide. Top and bottom defense, 15 wide. So it is taking a little bit off of my 120. So for my, dollar, it's $1.20 right here, -10 and -10. Okay. But that -10 offers up to, Okay, it offers up to $15 in profit trap around the area that my daily profit play would be threatened. And this is all going to happen towards the end of the day. So if I'm holding things to close, that's going to be important to have that defense in there. I'm again, where am I basing my defense? All around the expected move area. Okay, if the market has a huge rally, again, that's kind of out of the ordinary. It could happen, but probably out of the ordinary. We're hanging out, and I've said this before: 6550, 6500. We should see that act as support in this bigger market. Here is your SPX. Look left on your chart. We're hanging out right around that 200-day moving average. Okay. Look at the low right here. Look at the low right here. We are testing that area. Okay. The exact bottom. I'll look at this exact candle. The exact low there was 65.50. The exact low here on that NVIDIA sell-off day was 65.34. The day after that, the low is 65.21. Write that down. 65.50, 65.34, 65.21. Keep the math simple. 65.50, 65.20. Okay. 65.50 right here. We probably came close to testing that just this morning. There's 52. Expected move is calculated to be about 27 today. I would not be surprised to see the market responding to some type of intraday support in there. Okay. Moses upside. Yeah, I mean, if you like the upside on the dollar, you probably make a lot more money trading. I mean, option wise, you can trade UUP, but I mean, this is a big trade, by the way. If you like the dollar to the upside, I mean, that's a big if. I could see us pulling back into like 28.50 or so. I could see us pulling back into 29. That's kind of the halfway point. This could be just a multi-year range on the dollar as well. Right? This goes back to like 2022 highs. You can see this big range. UUP is an ETF that trades essentially the dollar. So it looks a lot like the DXY, but you can throw options on this. And I mean, percentage-wise, if we go up to the top, and this is why I'm not stoked about like, I'll just buy shares. I'm up 10%. I mean, you can make a lot more money. I mean, I guess you can trade whatever you want, but it's just if you look at where it's at, it's like, do you like it enough to buy it right here and say the dollar's going higher, or would it have been a better buy if it was at the lows? When nobody wanted to buy the dollar, it was obviously a much better trade. But if you're long, I mean, I just look left. I mean, this level, protecting profits or trailing stop losses into that level, I could see 29 right there at that gap fill. So, anything like the 28.50 to 29 zone kind of trailing out for profit would be pretty good. And if it goes higher, trail it. We might have the dollar be a surprise trade. So, just saying. All right, real quick, let's go to. Okay, I was looking to see if my butterfly was up a little bit more. You can see that the pin price this morning was pretty good. Obviously, I'd have to wait on it all day, but I'm not going to. So I'm taking the profit. I'm just looking to see what it's trading for. I'm showing, David said he got 480. Arthur got $5, but he maybe had different strikes than I did. Anyway, I'm happy with the double up trade. I was just spot checking to see, like, is it over $5 right now as we've gone by another 38 minutes of the open? Maybe it's about the same. Either way, good trade. Okay, couple of working orders here. Can I get a credit on that call side? I think I'm okay. I mean, if I get a credit, I don't mind putting like the call side credit on. So if 50 cents is not filling, obviously, the put side is now showing 63 cents debit. I'm looking at any type of additional credit here. If I can get this finance for even like 5 cents, 10 cents, 15 cents, that might let me sprinkle around another defense trade. Let me see if this will fill for 5 cents. 5 cents credit. Give me 5 cents credit. Nope. I'll try. All right, I'll just let that marinate at 10 cents credit. So, a couple of key levels. I'm gonna put this in blue. 65.50. We're pretty much at it. 65.20. It was 21. Was that bigger chart? So I'm gonna throw this in for a blue line, and this would be the Nvidia sell-off candle low. So NVDA 1120 sell-off low. It was the day after, but that's where we also ignited a decent little bounce. So just watching some intraday price action. If the market's going to slow bleed down here and then bounce back up, it wouldn't shock me at all to see prices responding to some of these levels. Either now around the 50 handle, 65.50, or down and around the 65.20 to 65.25, 65.20 zone. Yep. Romella did. Yeah. Yeah, the it was the 250 the monthly trades filled, yeah. Correct. Uh so David, you good on that butterfly, right? Yeah, it's in. 65.20 is November 21 low. Yes, it's 21. Look at the candles. Go back to SPX. So it's the day after. So it's the 21st was the low. The 20th low. So this big red candle, that Nvidia fake out day where it was like Nvidia candle was or Nvidia earnings were up and the market gapped up 1.5%, only to reverse 3% intraday. That was a wild day. But the low on that Nvidia sell-off day was 65.34. That was the low of the day. Okay. The next day, the market just pushed a little bit lower and tested 65.21. So the next day, 65.21. Over here, that low is 65.50. So all I'm saying is if there's support lingering today, 65.50 to 65.20, I should see some support in there. If the market is paying attention to that stuff, that's probably going to be some support. How much support? I don't know. Enough to keep it inside the expected move. That's all the support we need on a daily profit play, right? Okie dokie. Chris Pulver Pub at gmail.com for the expected move box. That is correct, Randy. Yep. Send me an email. Okay, Moses. Thanks, dude. Happy Friday. Have a good weekend. All right. So 50 to 20 support zone. I'll mark this up a little bit as well. So 50, I'll put potential support. See if we get it. So anything inside this blue zone, if we get support, that would stabilize our day. Okay. Now the nice thing is my price, my levels are way down here. Right? They're way down here. So doesn't mean that I can't still be threatened. This is why I have another pending order on the credit side, just in case we flush a little bit lower. That would be a 20 wide profit trap. Let me play around with this a little bit. So if I started at 64.95, let's go 95 by 80 by 60. That's still showing a debit. So it's doubtful unless I'm going really wide here. That's still showing a debit. So, I mean, getting that profit trap at like a 5 or 10 cent debit is fine. I'd obviously like to see one offer a credit, so that's why I have it pending right now. It may hit, it may not. Is DPP a paid service? Yes. So this is what I do in these morning sessions. This daily profit plan is free for everybody. If you're a new follower, you can jump into this session every single day for free. Okay. If you want my trades, my signals, my alerts, my education, paid services. Members only. Members only. So what are these courses? This is a 0 DTE efficiency index trade, which means we trade for 0 days to expiration. So we're trading for today. We're trading to win the day today. Okay. Waterfall income. It's basically a weekly index swing trade. This one trades major news, mergers, acquisitions, earnings. Did I place a trade this week? Yeah, we have one on Micron this week that's going to be a full winner. Double ups, low risk, high reward. I primarily trade butterfly spreads because I'm always going after super low risk trades and high reward. Our winner today was over 500%. That's not like 500% return on risk. If you risk a dollar, you make 500 or 600 bucks. No joke. Stuff like that. Okay. Pinch point. It's a volatility scanner. I'm looking for, I call it pinch because I'm looking for these crazy, condensed, boring, consolidated prices that have spent, weeks and weeks and weeks consolidating. Because usually what happens next within about 30 to 60 days is we start to see a lot of direction. So it's a volatility scanner that gives me these really nice setups. And that service is really fun to do because I take the trades, set a take profit, and we're hitting, 85% winners. Engineered options. It is a grind service, but we do weekly stacking, and it's based on I want to participate in the market, and I want to position around the long term edge. Whether we have bull or bear markets, the house edge is the markets are still bullish about 56 to 58% of the time, and so we have. I just call it this: we trade participation, break even, and then we have defense trades. And we have been winning every single week, despite the market being this year garbage. The market is 2 weeks ago, the market was down over 4.5%, and we still made money. Last week, the market was down over 2%. We still made money. Right? This week, I've been hearing the same thing the whole time. I'm underwater. I know. But if defense kicks in and defense does its job, we're probably going to make money for Monday's trading. So it's a weekly kind of income grid, income stack type trade. I've had a lot of fun with it because it's not super hard. It's a 1-to-1 reward to risk. I sprinkled in some bonus trades as well. So anyway, really good class, great structure, long-term house edges. We're going to make money in the service. It's been crazy how this has been a grind year. Crash insurance. This is a hedge class, hedging the portfolio, taking some very low risk for high reward hedges. Project Options Edge, this is essentially, I'm not going to say it's more advanced. You're all capable of learning all this stuff, but this is a little bit more capital intensive. And this is how I manage a lot of my accounts. So like my client accounts, I manage this with lots of put premiums. I have plan A, plan B, plan C, meaning I don't like to lose a lot of trades. This one has a 97% win rate. So, but we deploy a lot of cash. So if you have a margin account, probably best in Project Options Edge to trade a margin account because the broker will give you a lot more buying power. I don't trade on margin, but I'm saying it gives me, so when I take a trade, rather than doing a put on the SPY, that a cash account needs, $60,000 to do that. I can do a trade with Project Options Edge for the margin accounts, and it probably requires $2,000 to $3,000 in buying power. So I'm using my buying power to the best of my ability. And a lot of the trades we've taken this year, we're just stacking up a lot of premium. I'm sitting on over $400,000 of premium right now at March 20th. So all I need is a little cooperation and stability in the markets. Like don't fall 35 to 40%, and I'm going to be fine. That's how conservative I've been. But I just have time in some of these levels. Okay. And if you love my style and you want all this stuff, then we have Diamond members, which you have access to all of my services. So, Tom, to answer your question, yes, these are all paid services. If you are interested on any of this stuff, have questions, talk to a team, you can email us, support@priceparitipub.com, or you can call this number, and that's my customer service team. That is, let's see here. That's going to be Jen. That's going to be Christy. That's going to be Carla. That's going to be Sean. That's going to be Mike. It's going to be, you'll talk to somebody great, and they will walk you through. They know my courses and services really well. And if you have any questions, hit them up. Cool. GH says, am I in the right place for daily profit trade? I purchased yesterday. Yes, you're in the right place. Did you get the alert this morning? Because we post a trade around the same time every day. Trade went out at 9:35 a.m. this morning. Okay. And if not, guess what? We're coming back to do it on Monday. So GH, you're in the right place. Here's what I would say as a new member. And this goes for anybody. If you are a new member of any of my services, okay, I have a core strategy video that's about 15 to 20 minutes in daily profit play. I have a core strategy video in waterfall income. I have a core strategy video in double ups. I have a core strategy video in engineered options. Okay. Those are the fastest ways to get up to speed with what we do mechanically in these services. So I do the same thing almost every single day. I do the same thing almost every single week. I do the same thing every week. I do the same thing every week. Watch those videos. So yeah, you can always join me for a 60 to 90-minute masterclass, but if you want to spend 15 or 20 minutes and get up to speed with this is what we do every week, watch that core strategy video. Okay, so the trade alert. So GH, go in your classroom, and you can always call our team for this too. Go into the classroom, your one-click trading member portal, and you want to click on the Telegram channel to get the alerts. So there will be a Telegram channel that is daily profit alerts with Chris Pulver, and there's over 1,000 members in the service. And I post the trades each and every morning. So again, watch the core strategy so this makes sense. I don't want this to be like, oh my gosh, I have no idea what this guy's talking about. That's why we have master classes. That's why we have core strategy videos. That's why we have education, is get you up to speed to do this stuff every single day. Okay. So the Telegram is going to have all the alerts every single day. So this is what I'm in today. I'm in this trade today. I put on a couple of defense trades. So I now have one core strategy trade running with a bit of defense on the top and bottom just in case one of those sides gets in trouble. That makes sense? All right. So like I said, if you want to jump in there and talk to the team, give the team a call, ask them for, hey, how do I find the Telegram channel for daily profit play? Where's the core strategy video? Like it's all inside that classroom. So as long as you're in your one-click trading member class for daily profit play, you'll see that stuff. But first things first, watch that core strategy video. And the only prerequisite that I have for anybody that's in my services, any prerequisite that I have is for you, the trader, to be comfortable navigating a broker platform. That is all I want you to be comfortable doing. Now, this is Tasty Trade. There's Thinkorswim Web. There's Robinhood. There's Webull. There's Schwab. There's Interactive Brokers. There's TradeStation. There's all these different broker platforms. An option chain is pretty much the same. This is review for many of you, but an option chain is pretty much the same. You have an asset. You have a variety of expirations. And those expirations are certain days out to expiration, right? And then inside the expiration, you have all of these prices. And all these prices are lines in the sand. That's all they are. If price can stay above these levels, I should make some money. If price can stay below these levels, I should make some money. So right now, this is where I'd like to see price stay above. Let's see here. Call side, still showing a tiny, it's still not going to fill for, I'm trying to get like 5 or 10 cents credit for it. This 20 wide defense trade is still not filling up for credit. Let me play around with another defense trade here. Let's go 95 by 80. I swear I'm putting this trade in. 95 by 80, that's 15 wide. Let's try 20 wide here. It's showing a 50 to 60 cent debit. I'm not going to take the trade for that debit. I could go out of the money for let's see, 85 is my strike. Let me go like 60 to 85. This is probably going to be an expensive debit. I'm probably not going to take the trade, but that's 25 wide. Yeah. So, this 20 wide is going to cost me over $1. I don't want that trade. I'm trying to structure it with a broken wing. If I want to do like a put condor, that's another way I can maybe structure this trade. Let's go 85. Let's see. If I 65, this, I just think it's a big enough profit trap. It's probably not going to fill. So that is let's try this here. 6,500. That's a $15 profit trap. This is probably still going to be a debit. So that is 65, 64, 85. That'd be 15. Let's try 20 here. Yeah, I'm just gonna have to go so much wider on the actual risk side. I'm not going to take that trade. So the broken wing structure to me, defense wise, is some of my most cost effective way of playing defense. Is a broken wing butterfly. So I'm looking to add another kind of profit trap down here on the put side. Again, I'm just telling you, this blue area that I have, this level right here, somewhere in here, I'm telling you, don't be surprised to see the market bounce. Okay. Do I guarantee that? Of course not. But it just wouldn't surprise me looking at the chart, watching those levels on October 10th and November 20th. I think the market cares. I think in the zero DT environment, there's going to be some some at least interest to defend those levels. Okay. So, I mean, my defense is way down here, right? Um, I mean, part of me is interested, like, what if we do have the trade stay above the expected move around 65.27 today? I mean, I wouldn't mind looking at like a very low risk, like lower risk, zero DTE credit spread, or maybe another broken wing or something like that. But as long as I can get a decent premium for it, I entered the 64.90, 64.80, 64.60 put for 10 cents debit. Yeah, it's totally fine. It's totally fine. What I'm saying is if I can offer a little bit more defense for a credit, I'm trying to add something with a credit. That's all I'm saying. Um, by the way, we do have a pinch point trade on SPY today. That's another one that I believe expires today, or is it the end of the month? I think it's today. Oh, it's end of the month. Okay, so that's up $63 right now. I mean, we're trading $9 in the money on our pinch side. We're up 20. So pinch point. I like the 40% profit target. We're up about 30% right now. This one looks a lot better over the weekend. As long as price stays below 660, we go into the weekend with time decay. That should be helping us. The 31st is not next week expiration. It's going to be the week after. So we still have a little bit of time in that trade. Anyway, I just knew that we're trading both sides, like the pinch on the SPY. There's a pinch on SPY, pinch on Russell for IWM, pinch on Dow, pinch on Qs. All these indexes are starting to move. And so I'm not surprised that number one, it is breaking out. We are getting some follow through. All this has been happening the last couple weeks. Okay. Vladi says, I did add the 64.95, 64.80, 64.55 defense for 20 cents should be enough. Was that 20 cents debit or 20 cents credit? If you got 20 cents credit, that's pretty solid. That's what I'm trying for is can I get a credit for a little bit more defense? It's not showing up yet. If I wanted to narrow my profit trap, I could probably get credit for it. So let me fudge around this a little bit. So if I went if I go 65.05 by 95, that's 10 wide, right? But then if I do two contracts there, then 20 wide. I mean, I can get a credit for that trade, like 30, 40 cents credit. That's fine. But my break even is now 64.85, which is exactly my daily profit play put spread. So I'd like just a slightly bigger profit trap. That's 15 wide there. That profit trap kicks in a little bit better around that. Let's see. That's a debit. That's a debit. I mean, this is a 15 wide for a 5 or 10 cents credit that puts my break even around 64. 64.80 be my break even on the trade. 64.80 is quite a bit lower. Again, like there's never a guarantee. Even the defense trades has risk. Okay, break even at 64.80 is like the market's down 1.92%. Could it happen today? Sure. So I don't want to get like too silly on the defense because we could go 2% lower. So for me, it's like that defense. I just want to get that break even as low as possible and see if these profit traps actually land us on the day. You got credit for that? Nice. Fudge and A, Jason. Look at that. Jason entered the put fly at 90 cents. Did you close it out yet for $12.95? That's freaking sweet, dude. $12.95 minus a 90-cent debit. It's up 1,300%, my man. I don't know about you, but that's pretty good. 1,000% return on anything is pretty darn good, let alone almost 13 plus 100%. Fantastic trade, dude. I'm happy for you. Just don't let it slip through your fingers. I know it can get a lot bigger because we're 50 wide. That trade could be worth, 40, $50. Just saying, don't be too greedy. It's a great return. It's over 1,000%. Awesome trade. 1385. Heck yeah. Cool. Well, let me know how it goes. Let me know if you close it out, what it is. But I'm trusting that you'll make at least over 1,000% because I think it'd be silly not to. So anyway, I'm like I said, really happy for you. It's just a great trade. That's all you can ask for is a good trade. All right, snapshot for the day. We have some defense down here. We have some defense up here. These are my strikes that matter. So when it comes to today's price action, it matters that we're going to stay below the screen line and above the screen line. And then in the blue lines, what I'm looking at for the blue lines is that potential support off of that October 10th and November 20th candle lows. So if the market cares about those levels, we should see some support. Let me pull up some real-time gamma and see where these sticky levels are at. Let's take a look at this. So 6540 seems to be my bigger gamma level. 6500 is a maybe. Let's float this out here as well. Real-time gamma. I'm seeing a pretty sticky level around 6540. Does that guarantee support? No. But a couple things that keep me confident for today's trading is there's a big gamma level right here that could offer up some intraday support. And then we have the 100% ATR around 6520, which could offer up, once we see prices getting into these gamma levels, it rarely keeps going down. Usually there's enough stability in the 0DT stuff that this will provide a floor of some sort, and the market will likely snap back. But I'm pretty confident that we're going to stay inside the expected move, or at least inside of our needed levels, so above 64.85 and below 66.70. Okay. Could I pull in a little bit more credit today? That's a maybe. 60 and 50. Not a ton of credit, though. Okay, I'm just playing around with a couple of credit spreads. That'd be nothing fancy. All right. I'm just hanging out. I'm just trying to put in some trades where it's like, could I grab a few more bucks today? Could I grab, another $1, another $2 of credit safely? Hopefully, yes. I'll try to figure it out. All right, good stuff. All right, how are we doing? Let me have a look here. I'm going to jump into my pinch point scanner. We got a couple of expirations for today. We've already had a couple of winners close. This week, I think yesterday I had 2 winners close out. They hit the take profit automatically. So CR hit for a nice win. AR hit for a nice win. Those were hitting the 50% take profit levels. Let's see here. Alcoa, that was pending. Okay, profit hit there on EPAM. CRBG hit profit there as well. Hit profit there. Hit profit there. Like, this is what pinch point is all the time, is we just put our trades in, set our take profits, walk away. This today, hitting expirations on a couple of them, HPQ. There's a couple of the trades that, they might be losses today, which is fine. I take the losses as is to find risk, so I'm not that worried about it. But if we have some surprise movement, great. If not, we'll just take the losses and I'll update the tracker. Let's see your profile saying, what is your website to watch the video, learn more about your services? First time here. Arturo, what's up, dude? Thanks for tuning in. Why am I showing 10 wide on Tasty Trade? Check the expiration, Dave. Make sure you go to the weekly expiration, not the AM. Don't use the AM. Okay. If you go to the AM expiration, they're 10 wide. See this? AM expirations 10 wide. Choose the weekly. Now they're 5 wide. Yep. A couple people asked that this morning. Let me jump into the pinch point scanner for a moment. We had a nice little volatility push these last couple of weeks. Our pinch point scanner got a lot of that action. So let me jump into the scanner and see what's looking good right now. I have 30 tickers. We find some big ones here. Let's look for some liquidity. Intel's probably my best pick right now as far as liquidity goes. That's S&P and NASDAQ stock. INTC, pretty pinched. Yeah, we got a nice consolidation here. So nice little pinch on Intel, either up or down. And honestly, at this point, I would trade this both directions because this thing was pumped up hard with government ownership. But if we are entering into this like limping bear market, Intel could break and go lower. There's still plenty of room to give back some of these gains, but still have a overall like a strong stock that catches a bid. But let me see if this price is out. Let me see if this price is out for something we could look at. So we're looking at a range of maybe 48 to the upside and 42 to the downside. So that's about a $3 move that I'm looking for as far as like I want to see price get out of that $3 range. Let's go out on Intel and see if we can find a good looking trade. Intel has earnings on April 23rd, so I want to go out past earnings. I want there to be an extra catalyst built into that consolidation. If I go out, I kind of like the May to June. June is a 90-day expiration. That's expecting $11, and I need to break out like a $3 range. That should be very doable. Let's go June 18th on this. See if I can find a trade. If I go, don't want to make this terribly expensive, but plus or minus $11. If I go, let's say 49 to, let's go 50 to 52 is I need this thing to move up about $4. Okay, so that's fudge. So the strikes are interesting because I can go 250 on the call side, but then dollar by dollar on the put side. So it's almost easier to go like 48 by 50 here. So $2 strikes. And then maybe the 43 by 41. That seems expensive. Gosh, there's a lot of skew in this. That's a little bit better. $1.37. That's better. Let's see. How else can we trade this? So I'm expecting volatility. Maybe not much until earnings. Gosh, I mean, it's just a solid pinch. Just trying to think, is this how we want to trade it? Is just waiting for the market. I mean, at that point in June, I'd almost rather just go bullish on Intel. Kind of. If we're going to get out of this funk, I feel like Intel going up is probably better than anything else. What? Oh no. Is that true? All right. Romel, what do we say here? Dead at 86. All right. There's going to be some trending tweets on this with all those Chuck Norris jokes that were popular back in the day. Oh man. Yo, Walker Texas Ranger. The hairy Bruce Lee villain. That sucks. All right. Okay, so let's take a look here at Intel. $3 range, $11 move by June. I mean, I want to trade it both ways, right? To the downside, could we fall and have things get way worse? Sure. To the upside, could we, obviously continue this trend? That's why I put this trend line here. I think we have pretty strong support. If I just do the bull side of this trade right now, so this goes out to June. If I buy the 45, like this is kind of what I like about this. I can make, $1.13 to risk 87 by just being bullish. So, couple ways I would consider maybe trading this. Let me see if I can get something where there's maybe a profit trap right in here and there's no upside risk. Maybe a profit trap and a little bit of risk. Let me see. I'll get creative on this trade if I can find something I like. So we've got some decent support around the 42 handle. So if I go 42 by 40 by 37, that's not terrible. That's okay. Risking 160. I've got 40 cents that should be pretty easy profit on the trade. That's a little bit more risk, but my break even would be 39. This is around $41. I mean, if my break even is 39, if we can keep Intel above $40, that would be pretty encouraging. A little pullback here. Let's go $40 support. That's a 26% correction. That's not a bad trade. So max risk of 214 bucks. I've got a profit trap that pays me up to $100. Let me see if I can go a little bit wider, a little bit wider. This one's not bad. I'm pulling in less credit up front. But now my profit trap at least matches. So my break even would be down to $38 plus the credit. Let's see here. I'm going to take this trade for pinch point. That way there's no upside risk. If we go up through June, there's no upside risk. Let's see if we can get 55 to 60 cents credit on this trade. Well, that was freaking easy. All right, just got filled for 63 cents. Let me see. I'm going to try to take this. I'm going to try to get more credit for another account. So that was 60. Let's try 75 cents. That's a little bit less risk, bigger profit trap. See if I can get everyone a better fill here. So not filling at 75. Let's try 70. I got filled for 63 cents. I'll try 65 cents. All right. 63, I guess, wasn't a bad fill. All right. So trades coming out for Intel. Okay. So new trade for pinch. This is going to be trade number 115. And that just got filled for 63 cents. So that's out to June 18th. So I have a, what is this? That's 5 wide minus 2. Let me figure out the max risk here. So 5 minus 2 minus 63. So 237 max risk. Break even price. So break even would be 40 minus 2 minus 63. So break even is 37.37. Okay, trade is in. Trade 115, updating the tracker. Today is the 20th. For 63 cents credit. Okay, trades in for pinch point. Yeah, that's what I said, like the hairy Bruce Lee villain. He came in that where they were like fighting the Coliseum, and that dude was just caked in hair. It was like all up on his back and neck. May 15th, put Condor filled. Kirk, what trade is that? Is that you're talking waterfall income, right? Yeah, we had another waterfall income trade fill on SPX, I believe, for $1. I have the did one get filled for May? Yep, 63. Yep, that got filled. You're right. So $1 to make up to $1,000 profit trap. Risking 4 to make one with $1,000 profit trap. That one just got filled. So let me update that one in the tracker for waterfall income. Okay, so that is the 515, 6,300. Okay, so that is trade number 134. 63 by 6290, 6275, 6260. Yes, that's filled. Okay, update for waterfall income trade number 134 just got filled. Waterfall income trade number 135, 134. Okay, what was the GLD trade you did yesterday at 1228? I did the I pretty much did just like an at the money bull call spread in that one, Skip. So GLD filled yesterday right here. Oops. I did a 425 by 435 bull call spread. So I bought the 425, sold the 435 as 10 wide. I paid $4.47 for the fill. Offers me $10 of credit, so I can make $553 on the return. So $553 over the 447, 124% return on that. If all any price to do is be above 435, I think that's workable in the next 1,000 days. It's not a short term trade. It's a pretty big trade. Just out there, a couple of years to think the gold prices can be higher. Okay, sold a put too. Yep. Yeah. So that one was the. Are you talking about the ratio spread that I did? That was a Project Options Edge trade. So I did the bull call spread yesterday, but the Project Options Edge, that was a ratio spread. Yeah, that was a where was it? That one of just how is this trade still working? I got filled for like $500 on that trade. Yeah, I got filled for 525 on that ratio spread for Project Options Edge. That should be in the tracker for Project Options Edge. 280 by 265. Let me double check that. Project Options Edge. Did I add that to the tracker? I didn't. I put it in Telegram though, so let me find it. GLD. Yep. So I'll add this in the tracker trade number 125. GLD. That is a 12/15 expiration of 2028. So it's out there a ways. But as I mentioned yesterday, did anybody be interested in owning gold at like $237? Yes, 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 yes. Well, that's the trade that I took. So pulled in $5.10 or $5.25 credit. All right, tracker is updated. Okay. All right. I will start wrapping things up here a little bit. The day is not done. We still have a couple levels to be mindful of. As long as price can stay above this 64.85 zone, stay below 66.70, we're going to be in pretty good shape for the day. Watching that potential support for Friday to hang out around 65.50 to 65.20. That should offer some decent support on the day to keep things relatively contained. The market's already down 0.8%. That's gap included. Could it get worse? Sure. We would have to have the prices from yesterday's close to our strikes be down about 1.8%. Not saying that it can't. Just hopefully in a 0D environment, it's not going to get too nasty. But my gamma this morning is kind of sitting around that 64.50, 65, or I'm sorry, 65.50, 65.40 zone. So we shouldn't see price going too much lower without stalling. And that stall might be nowish. If it hits the 100% ATR, that's around 65.20. Like I said, 50 to 20 should offer some intraday support. Okay, Robert says, are all trades in one click? They are for the services, yeah. So, I mean, right now, I posted the trades this morning for daily profit play. We had a trade get posted in waterfall income. Newsbreakers, we're in Micron for a full trade today. It's going to be profitable. It's anywhere between 25 and 50 cents a contract. The butterfly trap is not filling because it was, price fell. We had a profit trap up here at $50 or $500, and it's obviously faded. So we had no downside risk on Micron. We traded it so if price went up on solid earnings and then faded, I was trying to take advantage of that move, and so we got what we wanted. We're getting that full profit up here, which is fine. Double ups, great winner today. Great winner today. I don't know if it's actually worth more profit. Jason, if you're still in that trade, you're pretty much in that freaking sweet spot, dude. I mean, again, don't let it go too long because your trap, I believe, is 6,500. So I'm just saying, like, if price bounces at 65.50 and goes up for the afternoon, your trade is going to start looking worse. So if you got 1,000+%, like you were telling me earlier, not a bad spot to be protecting some profit. Okay. What are the trades? Pinch point had a couple of winners this week. We'll have a couple of losers as well. They've been, these are swing trades, so it comes with the territory. But overall, pinch point's doing great. We have an 87% win rate. We keep hitting those trades and hit and take profits automatically. Yeah, doing great. 53 winners out of 61 trades. Not too bad. Engineered options. We will grind for a Monday close, as we always do. We'll see if there's a little bit of defense that can kick us in for the week. Crash insurance, we already have some hedges running. Project options edge, as I've been doing all year, selling lots of premium. There you go, Jason. Exited at 12.25, gain of 11.35. Dude, that is so freaking good. Right, you got in that trade for 90 cents. Is that right? Let's give Jason a big round of applause. That's freaking sweet, man. 11.35 out of a $90 debit, 1,261%. Ooh, baby. That's fantastic. Waterfall trade is not in one click. Well, it was already a pending order, Robert. I can post it there if you want. I just put it in Telegram right here. I mean, if you put the trade with me, trade number 134 was already sitting in pending. So I'll send it out, but it should already been like pending and filled, right? So I'll add it to the alerts. Waterfall income. Trade update. This week, we had several pending orders fill. Trade number 134. And I posted this yesterday as well. Trade 138 and 140. Expirations, strikes, credits are in the trade tracker. These were pending orders, $1 credit, risk 4, make 1 with $10 to $15 profit traps. Yeah. So 134, 138, 140 all filled. Yeah, Sean, I mean, I can sense you're not loving the stack trades. I mean, dude, you don't have to take trades with me every week. We've got stack trades. You know how it works. You know the reward to risk. Yeah, I mean, I'm taking the trades because I wanted to sit these orders like they're all sitting 10% lower. Do I think the market can go down 10%? Yes. Do I think the market can go down and stay down? Not really. Not in the timelines that we have. All right, just making sure. Because you're the only person that's been vocal about like these stack trades. Like, well, that's why we take small risk. Like it's a lot different than last year. You know that it is. Last year I was taking these trades, we were risking like $1,000, $1,500. I'm risking $400. So that's why I've been more. I'm not going to say aggressive. I've just been willing to stack up trades every week. I'm taking essentially 2 or 3 weeks of trades to what was last year, like the stacked up, $1,100, $1,200, $1,300 risk. It's like I can take 2 or 3 of these trades, which spaces me out week after week. So anyway, I'm just like I'm not gonna not participate. I do like the idea. I went out intentionally to May, June, July. I'm obviously hoping that our weakness window is going to get over sooner than later. The market's already in this weakness window right now. The month of March is already going down. So, I'm curious where the old Trump put is sitting because I'm sure he is the one that's going to flinch the most. If you ask me, Trump, in my opinion, is going to flinch hard. If we're down, let's say to this level here, this is probably when Trump and company get the most vocal. The Fed is not doing anything until we're probably down here or all the way down to April lows. The Fed is nothing. Powell's not going to do anything. Warsh doesn't even step in until May. So to me, like any type of bounce in the market is going to have to be we have to de-escalate in Iran, and Trump and company have to go on the offensive of like, you know, whatever, better energy, better this, lower inflation. This is our. I mean, just give us an optimistic agenda. Nobody knows why we're battling this war right now. I'm sure there's a plan. I just don't know what it is. I just know this market is not loving it, and this market is deleveraging, and this is going into. I mean, I've got some smart macro people that are reducing their equities exposure right now. That doesn't mean a crash. It just means avoiding some of that volatility drag. That's all it means, right? So if the market is going to be slowly leaking lower as things get resolved, I mean, I don't know if we have a V bottom. I don't think that we do necessarily. I think if anything, we have a containment. I could see this market. I mean, just hear me out. Market test this level. Let me draw a big, thick line here. Let's say the market tests this level right here. Okay. I'm telling you, there's going to be plenty of people that are talking about this trade as a head and shoulders and a topping pattern. I can also promise you that the bears take so long to be proven right in these markets. So I could see this market doing this longer and this rounded top taking longer than everyone thinks. And this market could be just a crazy chop fest all year. And yes, we might have a plus or minus of 7, 8, 10%. Okay. But I think if it comes down to this level, there's going to be some pretty decent buying interest. I think if it came down into this outer trend line, there's going to be some decent buying interest. That's what we're trading for. I don't want to see price crack 6,000. I don't. But if we get down to this level where we're just below the 200-day moving average and we come back above it, all these trades we have stacked into May, June, July are probably pretty safe for profit for waterfall income. Okay. If it falls and gets worse, I think that the market still bounces up and we're still safe for May, June, July, because that's the pre-summer push where seasonality, we typically see some up. So it's by design. I don't know. I'm not in control. The market does what the market does, but I'm going to keep participating regardless because I think they're good trades. I mean, there's a reason that we've won, 95, 96% of our trades because it works. And even when the market is down, I mean, here's what I would say. Would I rather have my my trades be down here with buffers and room for error, or would I rather be taking trades every single week, which is how everyone asks me, why are we doing this trade? Why is it strategy 2, not strategy 1? Because I don't want to take a bunch of strategy 1 trades at the all-time highs. And I say it every week. So this is why we didn't trade strategy 1 for waterfall income. Strategy 2 gives me more room for error. So we have anywhere between, 10 to 13% room for error. That lets the market do all this crap. And it's not been fun, but if the market catches a bid, I think we'll be okay. So that is what I'm hoping for. Even if of all these trades we have, if we land a profit trap, one profit trap will take away 2 full losses. That's one thing I'm really excited about for this year's this year's setups. Is our risk is way tighter, our profit traps are way larger, and if we land a profit trap, we can take care of 2 to 2.5 losses, which is a lot different than last year when I was, in a bull market willing to take on a lot more risk. This year I'm not. Okay. So anyway, just I'm shouting you out, Sean, because I've seen you be a little bit more vocal on closing playbook, and here in the sessions, it's like I get it. So to make sure you're okay, because we're doing this stuff every single week, and I get it. Like it's tying up buying power, and prices are going down, and we're not showing any profit right now because we've been sitting in trades, but the market's been going down. So that's given us our fills, which is fine. But I'm hoping we're going to be okay. All right. Okay. Good stuff. All right. What else? Anything else here? Deanna, let's fire up. What do we have lined up for stream today? Are we doing newsbreakers? I know I have. So if anybody wants to join me this weekend, I've got a pinch point live session on Sunday. Newsbreakers, we'll run that right now. We've got a full winner this week on Micron. We've had winners. Again, it's been a busy week. It's always a busy week. I'm always freaking trading my face off. Daily profit play, great week. Even through this, little bloody meltdown, we still made money almost every single day. I didn't have a losing day. I just was more conservative. Like yesterday would have been so awesome to just be, grinding that daily profit play because it stayed inside the expected move. Anyway, nice week for daily profit play. We got filled on some pending orders for waterfall income. That is fine. I'm actually kind of happy about that. It's low risk, manageable risk, profit traps, 8, 9, 10% room for error. See what happens. Newsbreakers, full winner this week. Double ups, nice winner, great winner. 500+% on a return on risk trade for today. Jason, big applause for Jason, closing out for over 1,000% winner on double ups. That's freaking awesome. Pinch point, we got a few winners. We'll have a few losers, but still we're hitting 86% winners. Engineered options. We were playing defense. We had, I believe, participation, break even, and defense kick in. It's not done yet. We'll see if we can get a bid on Monday. All we need is that defense trade to win, and we'll still make money. The market could be down. We can still make money. Battle with me. Okay. Project Options Edge, selling some premium. Added some trades in this week. That was added trades in MasterCard, American Express. We did Bloom Energy last week, and this week we added gold to the mix, GLD. Good stuff. Okay. Do we make money in waterfall if the market's going down? Well, yes. If you wanted to take my strategy to and call the top, you can certainly do that. But the premiums on those trades, Rob, are not that great, right? The premiums are not that great compared to the puts. Obviously, we're in a higher VIX environment, so it's been a little bit better for me just to go out of the money, 10% lower, 10% lower, 15% lower, 12.5% lower, and sell some premium and set the structure the way I want. And I still think the market has what it takes to still buy a dip. Do I think the dip is going to be to all-time highs again? This is probably my biggest concern of this year, is that the market does enough deleveraging that we have a lower high to lower low. That's where the pain trade is going to feel, right? And look, I don't know what this market's going to do, but if we have some type of trade setup like this market might also do the same thing again and just work its way down to a bigger trend line, maybe get to the 20% correction zone. And then it becomes one of the most important points where the market's going to be making traders decide, is this a buy or is this going to get worse? Right? So unless something changes to give this market a reason to go bullish again, I think a lot of good things are priced in. Our rate cuts are priced in. There's a pause this year. So the Fed's not really going to give the market any additional optimism. Trump and company, the big, beautiful bill, all got priced in. That got priced in late last year with the pump. What else? Inflation. Well, now inflation's freaking going up again. Probably going up again. So that's not good. Earnings, CapEx spending, a war in Iran. Like all this shit has been stacking up. This wall of worry just gets bigger and bigger and bigger and almost insurmountable. So I do wonder what that does to the overall markets. A little deleveraging goes a long way. And I think that's what we're getting right now. We've obviously seen a crazy dispersion trade where stocks are all over the place. Indexes have been relatively stable, but that's because the Mag 7 hasn't also been breaking down in a big way. But what I said yesterday, if you were with me, the market breadth is terrible right now. Terrible. Now, I am curious. If we see this deterioration continue, where's the index? If we're down here to like less than 15, if we're down here less than 15 on market breadth, it's hard not to see this and say, I think this is a good buying opportunity. And maybe it's not a long-term buying opportunity, but gosh, it seems like in the short run it would be. So I do think that what this is doing is this is cooling off all of the frothiness of all the freaking crazy bear or the bulls that are just like to the moon. This is cooling them off. Like this low, painful, slow, just dip lower, poke lower, poke lower. I mean, the rip is not happening to the upside, right? And in every down day, it's like we have an up day, and then it just slowly fades and pokes the lows and rips again, and then fades again. But we're making lower highs and lower lows. So I do think that this market breadth deterioration is cooling down some of the speculation and the frothiness and the leverage. I think this is what it is. It's a natural dispersion trade. It's a natural rotation, and it's a deleveraging that the market is needing. Okay. All right. Deanna has a screen. Sorry, Deanna has a screen. She's going to show a little session here. I'll turn it over to her. So anyway, come back and join me this afternoon. You want to talk more about this stuff, market breadth, deterioration, blah, 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 big picture stuff. Let's talk this afternoon for a little closing about, because the trades that I have today for daily profit play, we're hanging out around that 65.50 zone. Cool. Do we catch a bid late in the morning, late in the day? Maybe. I said 65.50 to 65.20 is really good support today. It should be. If it's not, well, I'm still out of the way with a 64.85 with a profit trap sitting down there anyway. So we'll see what happens. All right. Deanna, fire up some newsbreakers. Come back and join me this afternoon. YouTube.com/Chris Pulver will be live maybe 3:15, 3:30 to wrap up the day. All right. Thanks. Bye.